Hello everyone, it's Wednesday, June 18. Today we're taking a closer look at the euro and British pound charts to assess potential market shifts. The euro traded sideways in early Tuesday's session as markets digested stronger than expected data from Germany. The economic sentiment index surged to 45.7 from 25.2, while the current conditions gauge improved to minus 72.0 from minus 82. Likewise, Eurozone economic sentiment data for June proved to be positive, which helped the single currency hold steady, reinforcing its near-term bullish potential. Later in the day, however, risky assets came under pressure as tensions in the Middle East flared. Reports of potential U.S. involvement in the Iran-Israel conflict prompted an emergency White House meeting, though no immediate military action was confirmed. Nevertheless, the unresolved situation leaves markets on edge, with Washington expected to clarify its stance within the next 2 days. So the situation remains fluid and warrants close monitoring. If the US escalates its involvement, markets could see a near-term dollar rally, renewed safe haven demand for gold, and weaker risky assets. Therefore, while the current technical bias remains upward, heightened geopolitical uncertainty calls for caution when considering long positions in the euro and the British pound. Now let's examine today's macroeconomic calendar. It includes UK inflation data. Consumer prices are estimated to have risen 0.2% on a monthly basis in May, slowing from 1.2% in April. The annual rate of CPI inflation is also expected to show a minor decrease, coming in at 3.4% compared to 3.5% the prior month. A confirmed slowdown would bolster expectations for Bank of England rate cuts, potentially weighing on sterling. The euro area is set to release similar data. The bloc's annual inflation rate is expected at 1.9% in May, down from 2.2% in April. While moderating price pressure support the ECB's rate-cutting path, policymakers may pause given Middle East risks. Rising oil prices could reignite inflationary pressures, complicating the central bank's plans. All eyes turn to the Fed today as it concludes its policy meeting. With rates expected to hold at 4.5%, Fed Chairman Jerome Powell faces heightened uncertainty from the Iran-Israel conflict. The Fed will likely emphasize patience as energy price spikes threaten to stall disinflation progress. This hawkish tilt could provide fresh dollar support. Turning to technical analysis, the 1-hour EUR USD chart shows that a false breakout at 14.99 would trigger a sell signal, with the euro sliding to 14.56, potentially reaching 14.08. If Powell strikes a hawkish tone, the European currency could dive to 13.77 and even 13.47. Long positions at 14.99 and 14.56 could be considered on a false breakout. Going long at 14.08 would be prudent on a rebound, aiming for an intraday correction of 35-40 pips. If bullish momentum persists, it would be wise to look for long entries at 15.37 and 1.1579 on a false breakout. A rebound from 14.08 would offer a prudent long setup, targeting a 35-40 pip intraday correction. Speaking of the British pound, it has experienced a sharp decline. In the event of renewed selling pressure and soft UK inflation data, a break below 34.31 could accelerate losses toward 33.91, opening the door for a deeper slide to 33.43 and 33.12. At these support levels, I would recommend going long on a rebound, targeting an intraday correction of 25-30 pips. Long entries at 34.31 and 33.91 should only be taken on a false breakout, counting on a minor recovery from yesterday's drop to 34.72, with the ultimate upside target at 35.03. False breakouts at these resistance levels could present short opportunities. Going short on a rebound would be relevant at 35.33 in anticipation of 25-30 pip correction. Best of luck to all.